that means we are now live here on our halftime report, a daily show where we break down the markets one step at a time. TackleTrading.com here with all of our coaches. Today's show, a lot that we're going to unpack in terms of technicals, not a lot in the news, more stimulus conversations that have been happening between Mnuchin, Pelosi, and some commentary out of the president as well. Vice presidential debate ended last night, not much market implication. We did have a jobs number here this morning for unemployment claims. We'll take a look at it if it had any impact on the market. IBM is spinning off some of their internal businesses, their IT service department and whatnot. I think it's a very interesting news story. We'll get Coach Matt's take here in just a second. Domino's earnings. Regeneron applies for emergency use authorization for their COVID cocktail, but we're going to break it all down one step at a time. Got the full crew here today. By the way, if you're watching our show for the very first time, welcome to our channel. Click subscribe, click the bell, come back and join us. If you are a veteran of our community, hashtag Team Tackle in the chat. And let's rock and roll here, guys. We've got Matt for a few minutes, and he's got to bounce. Then we got Mark and Tyler as well. Full crew here today. Matt, first you. How you doing, sir?
Tim, doing absolutely fantastic, and looking at another potential breakout on the intraday chart right there at 34.35. It's been an interesting little day, trying to, not exactly strength, but trying to build some strength right now, and you got to like what you're seeing in the market if you're a bull.
Yeah, two news stories I want to get to before you leave, but let's do a quick read just on the market here, Matt. Simply put, this is a breakout, yes?
Yeah, you got to call it a breakout at this point. I mean, we got to see the close here today, seeing that close above that 34.20 mark. Obviously, we fought those levels the last couple days. But yeah, you got to call this breakout. Now, couple the analysis with a little bit of the NASDAQ, and, you're maybe a little lukewarm on the breakout. You're not, full board, what was the unleash the Kraken and open up those risk graphs type moment. But you got to like what you're seeing on the S&P. It's breaking out on the NASDAQ. You're still hovering underneath that breakout channel that was really kind of formed later last week, Thursday, Friday of last week, right there at 11,600. So, you're seeing a breakout. Is fairly clean on the S&P right now. It's not the momentum you'd like to see on the breakout, but I think the NASDAQ hovering right underneath that 11,600 level is has a little bit of something to say about it as well.
Yeah, Marky, what's your read on the market conditions? Obviously, we're up here now for the third out of 4 days in the week. The one day we had down was when President Trump came out and was calling stimulus talks off. They seem to be back on, though, and the markets are rallying on this. How are you reading the market condition price action?
I think, and we talked about it yesterday, I think the general sentiment, and this is what I did from my gathering and dozens and dozens of articles, is they have now punted on stimulus before the election. They believe that a broad stimulus will pack, and that has been the theme now. It's like, we're going to get stimulus one day, and I think you're seeing effects of that in the price action today. Nancy Pelosi came out today, and twice last week, and of course there was the big Trump one this week, twice last week, McConnell came out once, and Nancy Pelosi came out once and said this deal isn't happening. And you saw the market go down, the S&P go down 20, 25 points on the news headlines. And then, of course, we saw Trump's effect on his. I think there is now this broad building consensus that, no, we're not going to get a stimulus deal done before the election. That's not going to happen. We accept that, but we will get one day. And so
the original proposal from the Democrats, I know
$3.4 trillion.
If we have a Biden presidency, don't we get more than a 3.4? Don't we get more like a $4 trillion package?
No, I don't believe that. I think you'd still be in the north of somewhere in the $2.2 trillion.
I mean, you got to remember that even if unless the filibuster is done away with in the Senate, and this is one of the things maybe the market's not doing. You go through some different scenarios. This is what I've done in my head. So the House is going to remain with the Democrats regardless. I mean, there's just no scenario at all where the Republicans take the House this election. But even if Biden wins the presidency and the Democrats win the Senate, unless they do away with the filibuster, the Republican Senate, still has something to say about that.
Yeah, and it's not even just the 50-50 with the filibuster role, but you also have the fact that unlike the Republicans who are typically in line with one another, that's not how Democrats in the Senate behave. There's a couple Democrats in the Senate, that have a tendency from a fiscal perspective to be fairly conservative as well. And so, yes, there will be proposals in the $3.5 to $4 trillion range, but you're not going to get wide support for that out of the Democrats, even if they do control the Senate. So to me, unless the Democrats have like 53, 54 senators coming out of the election, which I just don't believe is going to happen, they might get a majority, but a majority still is not going to be the same as Republicans getting a majority. So yeah, and I get it. It's out there politically, right? Oh my goodness, fortunately, all this, it's out there politically, but that's just not the way national politics work. So in my opinion, yes, we would get stimulus. We would get a higher stimulus package with the Democrat, controlled Senate, Democrat obviously controlled House, and a Democrat leadership in the presidency at that point. But I still believe that the ultimate bill would be in the Pelosi's range of 2.2 trillion right now.
See, and I'm going to just play contrarian because I am now the official halftime report, Eeyore, right? Like I'm gosh, ever since I wrote that article for Tackle Trading Newsletter, I've become this like, oh, let me give you 84,000 reasons why the market shouldn't go up from here. Technical breakout is beautiful though, and I have added bullish delta. I just don't see, unless they do it away with the filibuster. I mean, can you imagine a Biden presidency? I mean, the Republicans are not going to be accommodative at all in the Senate.
No.
They'd have to do away with the filibuster in order to do anything. And so, politics.
Which, quite
right?
frankly, I hope that the filibuster maintains.
Yeah, same here.
The filibuster
there
is
needs
very
to be a
important.
minority rights within the Senate
Yeah.
to have those checks and balances. If you completely overhaul the entire system, then we have problems because whoever's in power can push through whenever they want.
Especially from a centrist perspective, I love the filibuster because it stops the radical behavior of both sides of the equation.
Agreed.
Mm-hmm.
So there's still a long ways to go between now and a big stimulus package, I guess is my big point.
Well,
in the short term, I don't think the market's going to care at all about it.
But again, and this is something I've been saying for a couple weeks now, I totally get that. But how many examples in the last few years do we have that, from a trade war perspective, from a stimulus perspective this year, from an earnings perspective, just those three perspectives. Oh, like in 18, well, we're going to have these trade situations. There's all these different variables, but you know what? We're going to get a phase one trade deal at some point in the next 3 months. That 3 months came, no phase one trade deal. Guess what? The market didn't sell. Oh, we're going to get a phase one trade deal 3 months from now. Okay, let's build up price again. Phase one trade deal, deadline comes, no deal. Oh, let's not sell it. Let's get it. Oh, we're going to get another phase one trade deal in 3 months from now. Earnings in 2018, we have negative earnings. Oh, don't worry about this. Growth is going to come back in 19. When growth didn't come back in 19, well, we're going to get massive growth in 2020. When 2020 happens, pandemic happens, and the end of the world happens in March and April, we're going to see this V-shaped economic recovery where by the third quarter of this year, everything's back up and running. We're going to see, and it hasn't transpired like that. We're still seeing 8% unemployment. We're still seeing, net neutrality in manufacturing data. We're still seeing, the initial claims, which I do not believe the report, but we're still initial claims, seeing 840,000, initial claims just today. Has the market sold that? No. The market does this, guys. It builds these theses, it builds these beliefs in a certain time frame, but then it's fickle. It's not really solidified on that opinion, and they chase that nut like a little squirrel from Ice Age all the time. There's this shiny new object. We're not going to get stimulus this week. Well, guess what, guys? We haven't got stimulus since July 31st, and guess what? The market has been bought up in that capacity. And so when you're telling the market today and you're saying, okay, we're not going to get stimulus, guess what? We're not going to get stimulus. Most of the people in the market know that. And now what are they talking about? Well, but we're going to get stimulus at some point in November. And if we don't get stimulus in November, we're going to get some degree of stimulus at the first of the year. This is what the market does. It chases that next little egg. It chases that next little squirrel. And so to me, whether you get stimulus today or not, the market is now moving on into we are going to get stimulus at some point. We're just going to have to navigate the next 26 days.
Yeah, no, and I really think because those headlines and the algos sold on the Nancy Pelosi rejects skinny stimulus package, says no airline bailout, which is kind of the lowest feeder because even they passed Like last week, they passed airline bailout, but now apparently that's not on the table.
Okay, but let me go.
But
let me
Algo
challenge
sold
you
off
on that,
initially,
though.
and then they just immediately go up. So this is
But
the
they
first time.
only sold in the Dow, Mark. They didn't sell in the S&P.
No,
I'm
with you. There, my point is that the fact that they didn't, that it wasn't more than this quick sell off that was immediately bought up, shows that the negative stimulus headlines before the election probably don't matter anymore.
Doesn't have the same impact that we were seeing in the last couple of weeks.
Today is the first evidence I've seen that, and so. And from a long-term thesis, and this is the difference between trading and investing, right? The investor in me is going to play out everything because that's for the long haul. That's forever. That's for 5 years, 10 years, 20 years. The trader in me is like, I'm adding bullish delta.
Tyler, I mean, does the trader and you see it the same way? You see the breakout, the potential here if we close above this 32.20 that Matt's been identifying for quite some time. Are you adding bullish delta here as well and kind of ignoring some of the headlines?
Oh, Tim, that's like asking me if the sky is blue.
Yeah, I was going to say. Tyler, are you kidding me? Tyler was front running yesterday.
No, he's been front running for 2 weeks. So
first of all, Tyler's been front running for like 15 years. But,
yeah, that's true.
I think, I don't know. I was going to craft a little Trump story. I bet he's like, I got COVID, YOLO. I need some calls. I want to tweet this out. Freak the children, and I bet he bought calls on that.
He bought the dip.
He probably slingshotted it.
No, Tyler and I are Tyler and I are the biggest Uber long-term bulls I think there are. And like 2 weeks ago, like when the market was crashing, Tyler and I did a show together, and we were like, we were selling out of the money puts. Like, so, it's and on a technical signal like this. At a minimum, it's going to be a positive cash flow, bullish environment.
I think it goes without saying in the next 26 days, there are massively unknown variables, correct? Anything can happen and you got to work in that capacity. But the reality is that's a technical breakout and you got to be adding delta.
Mm-hmm. You have to, because even if this one failed, if you buy a breakout of a month-long consolidation pattern on the broad markets 1,000 times the rest of your life, it's not going to work out every time, but at the end of your trading career, you will look back and say, that was a really good decision.
You buy breakouts.
Yep.
Tim, I got to run. You guys have a great rest of the show, but I am very interested in seeing your guys' take on how IBM is spinning off IBM. So with that said, I'm out.
All right, see you, Matt. We'll see you tomorrow for Friday Fun Day when Frank comes and joins us. Tyler, will you do a quick and thorough, actually, I don't know how you do both of them, maybe just a thorough technical read on the market here. I like the breakout. Obviously, the 34.20 was in play. We've been talking about that. And maybe Trump did YOLO long calls. I think that's pretty funny to think about, actually. It did come down, found that intraday support. It's now rallied 2 days in a row. How do you unpack this? I mean, is 35.87 a target? Do you just trade it with momentum, bar by bar? How are you approaching markets right now? And give me a couple of time frames as you read it.
Yeah, I mean, I think it completely depends on what kind of strategies you're using. But ultimately, the trend is up. You're breaking resistance. Whatever that looks like as a short-term trader, you get paid to take risk. You want to take risk when the odds are in your favor. The trend is up. You're breaking resistance. The news is whatever it is, but the market is reacting bullishly. So, I mean, here's the thing. If you're not getting more optimistic here, then what would it take?
Right.
Are you going to wait for 3 more green bars and then get optimistic? All you're going to do in 3 days, if we get 3 green bars, is say, I should have bought 3 days ago. Mm-hmm. So that's all about why we like to have clean, clear resistance support levels, rules-based trading. This could fizzle. I don't know. I'm with Mark though. I think over time you make technically sound decisions, and it makes money. In terms of where the target is,
we go to an intraday chart, like 5-15 minutes. Yeah, I mean, where was the sell-off on the Nancy Pelosi headline? Can you identify it? That's how.
I didn't know there was a Nancy
Very,
Pelosi
very, very tiny. Very
Yeah,
tiny.
I mean, it doesn't even look like it's more than normal price action, right? I mean, that is that little bar that you see that went down slowly,
Here.
yeah, that little half-hour block, and it couldn't even close below a 15-minute 20 moving average. I mean, that's and immediately just bought up.
Yeah.
Once again, anything can happen here, and I'm one of those. A lot of the delta I add is out of the money naked puts, out of the money credit spreads, and all that. And so if it reverses, I'm like, I'm still okay. But it's just one of those situations that, man, it's resolute. And we'll know more, right? In a couple days. But man, it just did not sell off on that headline. I mean, and that just is impressive to me.
Yeah. So in terms of the target though, Tim, I mean, pivot wise, yeah, I mean, it's the all-time high, 35.87 from a pivot perspective. That's the next pivot. So it doesn't mean you're going to go there in a straight line, but ultimately I think that's your target. The other thing I think is impressive is small caps. Like, I know that NASDAQ has taken a breather here, but small caps have woken up in a big way, and that's never bearish. That's never bearish. You've taken out multiple resistance in the Russell 2000 index, multiple resistance levels. And is it a little extended? Yes, but it's not bearish. It's not bearish at all. And so this gives me a little bit more confidence to bet on the breakout in the S&P. Yeah, Tim, I mean, look, I don't think I need to belabor the point. The market is strong. The market is bullish. It could pull back, sure, but I don't like betting against breakouts.
No, I think that would be a bad plan over the long course of any trading career, right? You do not want to bet against the momentum in the breakout and try to counter trend trade. No question about that. So the breakout here, I mean, if we get a close, even that's conservative confirmation. So I think you got to treat it as such. Now, Mark, you had mentioned that you were adding long delta in your own personal trading. I've done the same thing. Are you doing that through theta strategies or like directional strategies? Are you going
primarily
equity?
through theta strategies, but a little long delta as well. I mean, that's just my normal MO though. So I'm not really doing anything different except the magnitude of what I'm doing, because it's like when I sell those out of the money naked puts at levels that I'm willing to take ownership of, on a breakout, that might be the last chance I get to get a really good price, like on the broad market index, when I sell a naked put on the SPY way down below, and I'm willing to take ownership, and I'm willing to manage that as an investment on a technical signal breakout. Well, we know breakouts, and that might be the last chance I get. And if it fakes out, that's fine. I still have this lower level, but we know breakouts, and we know 2020 breakouts in 2020 sometimes have been ferocious, ferocious. And so trading the breakout however you do, but I have added a little directional long delta as well.
Yeah, and I think that's appropriate. One of the things I talked about in the Tackle Today email today was the difference between theta and delta strategies, and how when you're catching these opportunities, some traders are going to choose to trade it directionally, Tyler, long equity, bull call spread, whatever it might be. Others might choose to trade it with a bull put or a naked put. Tyler, how would you approach a condition like this? Because to me, I want to have the upside. I want to have that upside potential on a breakout type momentum play. But what about yourself? How do you approach it?
Well, I think it depends on which chart you're looking at. Like if I'm trading something like the S&P ETF, if implied volatility is low and options are cheap, I kind of favor bull call spreads, right? Maybe a bull call vertical on this, just doing a nice debit spread, directional delta play. So I think it depends on the pattern, Tim. I mean, versus you look at a DraftKings and it's pulled back and it's got pretty high implied volatility. Well, that's a different type of setup, different type of situation. So you could have two different traders say, oh, the market's breaking out, I want to add bullish exposure. Mark goes and sells puts in DraftKings. I go buy a bull call spread on the S&P. I mean, I think there's so much variation with respect to chart. I think you can almost come up with anything bullish. But that's the recurring theme, right? I'm not going to be adding negative delta here. It's going to be positive delta in some fashion.
hmm You know, and the thing about it is we're catching the breakout on a Thursday. Obviously, I mean, entry points today, you still got the Friday trading. If it ran quite a bit, it would change a lot of those patterns. So scanning is very important. By the way, Tyler, I know you did a webinar last night on how to you look for candidates right now. I did some scanning this morning. There's a lot of really good individual charts setting up, you know. So I think there's plenty of opportunity. You can play the broad market, you can play individual companies, and kind of apply the systems that make the most sense to you. Let's keep flashing through the markets if we can here, Tyler. Let's go through commodities next. Crude oil, give me a chart read. Gold, give me a chart read. Then the dollar, if you can.
I think this, well, I don't think, I know. One of the reasons why small caps have done so well is because energy is making a comeback and banks are making a comeback. And those are the two big sectors that you'll see drive the Russell 2000 index the most: banks or financials and energy. We have crude oil to thank in part for the rebound in energy stocks. I'm impressed. I mean, this thing's been hopping around like a jackrabbit, and it looked kind of ominous a week ago. You know, it's testing support. You got to be pleased if you're a bull that oil held support, rallied all the way back up to resistance, and you are seeing some short covering in energy stocks. I don't think there's a trade here. I don't think there's been a trade in oil for months, but I'm happy that it's coming back up. I'd be watching resistance around 41.50 or so. The problem with trying to trade a breakout is you got another resistance sitting right on top of it. So I don't see a trade here myself. I'm just pleased that we've had a 4-day rally, and that's been one of the bullish undertones that's helped, I think, small caps make such a good recovery this week.
Mark, is there any trade here for you besides range bound theta stuff? Because I've been a complete stay away for a long time.
And I mean, I've been spot on for over a month now on my oil analysis. Listen, I expect a range between 35 and 45, barring a legitimate COVID-19 vaccine, reopening up of the economy, something that serves as a legitimate catalyst. You're just not going to see the sentiment necessary to build that. So if you chase oil, let's say it has another couple of days and you're like, oh my gosh, oil to the moon, I think you're doing the wrong thing. I think you fade the extremes. When it sells off big, I think you look to add. When it sells off, when it goes up big, I think you look to take profits. So that's how I'm playing oil.
Gold next, if we can here, Tyler, as we're working through commodities. You know, kind of a nice little breakout on the markets here today, but outside the broad markets, there's not a lot of the action going on. Interesting chart here, though. Give me a read if you can.
Yeah, so little disappointed that gold was unable to break back above its moving averages. We'll get to silver here in a second, but that bar a couple days ago was disconcerting if you're a gold bull in the short run. And the thing is, though, this is textbook technical analysis 101 behavior. You broke a support level. You had some volume come into the marketplace, scared the children. You got oversold. You had an orderly retracement right into old support. That old floor became a new ceiling right at a descending 20-day moving average. And lo and behold, sellers showed up. Like, who would have thunk, you know, just out of nowhere, sellers come in and they reject the rally. That's kind of exactly what you would have been concerned about if you played this bounce. So this is behaving very well technically. For me personally, I closed some positions in silver 2 days ago because I was worried about that old support becoming resistance. It doesn't mean we have to get crushed. It just means that that's a low probability time to enter bullish trades or to increase exposure. I'm not interested here, Tim, unless this thing can break a pivot. If you look at it and keep it simple, right now it's making a lower pivot low, a lower pivot high. That posture has to shift before my bias changes. So for me, call it 1930, you know, this pivot high, you got to take that out for me to start to warm up to bullish trades. Unless it gets oversold enough where I want to maybe sell a bull put or a naked put. Directionally, we got to get back into an uptrend. So for now, it's a stay away from me.
You know, Mark, am I being a little bit too greedy to want a deep pullback before I add, you know, positions here? Because I want the 200.
That's one of the things that makes trading easy for me is like, you know, I love adding things at lower prices that I love, that I think are a great opportunity. So I don't think that's greedy at all. I'm in the same camp. And it's one of those things that, because we're in a community, right? And we're in a community with people I genuinely love. And I mean that the members we have at Tackle Trading add so much happiness to my life. They really do. And so I'm always like, have this like guilty feeling, because I know some people own gold, right? And downward pressure can cause stress. You know, so I always feel a little guilty, but I mean, I would love to add gold at lower prices. We talked about naked put levels, you know, yesterday on gold, you know, like adding great things. It's like Apple. If Apple were to go down to a certain price level, I'd start adding it, as with a lot of great companies and with a lot of great investment opportunities. And so, you know, I don't think you're greedy at all. I think, you know, until you get a technical signal that says, uh-oh, the gold might be ready to take off again, I think you do. Be greedy. Be greedy in the situation. Wait for a deeper pullback.
Well, and it's kind of weird because obviously I still own some. So it's like I'm not rooting against my current position. If it ripped higher, Tyler took out the pivot and just went up, I'd be happy. You bet, no doubt about it. But I approach gold long term. I don't approach it as a trader, right? So in this one, I wouldn't mind adding a little bit more hedge. Tyler, thoughts on that?
No, I think that if you look at the evolution of any trader, I think everybody gets to the point where maybe they start out with like an all in, all out type of approach, where they're like, I'm either all in or I'm all out. And then you get exhausted over years of doing that. And you're like, this is exhausting, all in or all out. I'm going to now have like a core position. And then I know, okay, my bias is I want to own gold, like I'm long, or I want to own the S&P, I'm just long stocks. And then I don't have to feel like, oh my gosh, I'm missing out if it's going up, or oh, I'm getting killed if it goes down. I mean, maybe you worry about that part, but then you can be more tactical, more strategic, and you could say, yeah, if it goes up, I'm participating. If it goes down, I'll buy more because I'm long term. I think it changes your mindset from freaking out, either if you're missing out or it's going down, and then you just start to look more opportunistically, right? You start to say, look, I don't need this in cash. I'm going to put it in an asset I think goes up over time, and I'm going to tweak it. When it gets sold off a lot, I'm going to add some exposure, because I was told you buy low and you sell high. So I'm going to put that into practice. I'm going to look for big sell-offs. I love the idea of trading around a core position. I think it's liberating. I think it's much easier to do emotionally than to be the frantic, do I get in, do I get out? I feel like that right now, like S&P 500, for example, just real quick. You know, there are people watching this that are like, should I buy the S&P? You know, is it going to go up tomorrow? Is it going to go down tomorrow? It is so liberating to just have some exposure. And it's like, I don't care either way. If it goes up, I got some exposure. If it goes down, I know it'll eventually go up and I can add exposure at a better price. I just love that approach. That's what comes to mind on gold.
Yeah, and I love the mindset there. I think you're right as well. I mean, the emotions of being a new trader, of either being all in, all out, hedged all the time, whatever it might be.
Yeah.
When you've got that light switch type mentality to where it's either on or off, it can be too much pressure and emotion, especially around investment portfolios, Tyler. Like Mark, you're always selling some naked puts, right? You're adding theta and cash flow at some level in most market conditions, you know.
I will die with naked puts in my portfolio with instructions on how to manage them to my children.
The kids will think you are naughty. Did you know Daddy had naked puts?
Oh no, my daughter is still like naked puts. She thinks it's funny because I had a friend over and we were having a little barbecue a few weeks ago, and you know, the woman that was over here asking, it's like, well, what does your daddy say the most when you're just around? He's like, and she's like, naked put. So yeah, that's so funny. No, naked puts are amazing, but they are its own art form. Like, and I say this all the time when I'm talking naked puts. Listen, you will really believe, if you believe in your investment thesis, when that price goes below your naked put. Yeah. You will believe, or you will be like, oh my gosh, I have no belief at all.
It's all fun and games until you got to make good on your promise.
And you know, and it's exciting though. I mean, once you own it, but when you do own it, and you have the capital to add more at even lower prices,
Yeah.
and you believe, I mean, you just in your head, you count the money you're going to make one day. Yes, your account's down in the red today, but in the future, you're like, this is going to be really, really nice.
Yep.
So investing is its own art form.
The dollar's kind of boring here today. Quickly look at Bitcoin if you can, Tyler. And I don't know if do you ever trade Bitcoin at all, Ty?
No.
No, it's not your product, but you are a
What's-
technician. I do want to get your read on the chart here because
BTC.
slash BTC. It is starting to kind of cook here a little bit, Tyler. We're about pushing into a breakout. Where would you have the breakout here, and how do you read the chart there, Ty?
You know, wouldn't it be terrible if you had no technical analysis tools and you're trying to trade something as completely unmoored from reality as Bitcoin? It's like, how do you value this? I don't know. Like, it doesn't have any cash flow. It doesn't pay interest. Like, there's no fundamental analysis with Bitcoin that I'm aware of, other than people who wear tinfoil hats. What else are you supposed to go off of? So, of course, you're going to see that this trades pretty well technically, because we're all playing with the same set of tools in the same toolbox. I like this as a nice little ace.
I was just going to say, draw a trend line on the bottom of those higher lows.
I got you, Boo. Don't worry. I read you.
Listen, I'm front running the breakout on Bitcoin. I believe that there will be a, I've just had this spidey sense for months now that there is going to be a bit. I don't know how 2020 can end without a Bitcoin blow off on the top. It just seems like if you don't have a blow off on the top on Bitcoin, then 2020 just really wasn't complete. So
yeah, it's very constructive.
And that chart is setting up, just got a little bit of resistance, got that mess of a 50, and then you got a very favorable environment for Bitcoin. Now, hey, cart before the horse, right? But I added more Bitcoin exposure today. So
are you using, we're not doing Bitcoin futures, are you? Are you using like Coinbase or?
Oh, I'm using some real garbage.
He gets the Bitcoin kicker out of the companies who own it. By the way, that might be Square here in the future, although it's just a very small percentage of what they do. Tyler, you said that you don't have fundamental conviction or know how to evaluate the fundamentals. I'll tell you a company who does. And let's move into stock analysis here today, because Bitcoin into Square is perfect right now. You know who else added exposure to Bitcoin, Mark, is Square. They said they believe the cryptocurrency is an instrument of economic empowerment and provides a way for the world to
and that's what got me to add some exposure, some more exposure, I should say. And Bitcoin, different trading instruments have treated me very well this year, and I imagine they will do. And the more companies you have like Square, because the specific news and the catalyst, because Bitcoin doesn't have a lot of catalyst, right? We were actually talking about that yesterday, but announced this morning that it had purchased about 4,900 Bitcoins at an aggregate purchase price of about 50 million, which represents about 1% of Square's total assets at the end of the second quarter of 2020. And the chief financial officer says, we believe Bitcoin has the potential to be a more ubiquitous currency in the future. High points for a high GRE SAT word and ubiquitous. But this is the Bitcoin, I guess, thesis, is that the more mainstream accepts it as a currency, as a legitimate investment, it's going to rile up the troops, right? It's going to rile up the troops. It's like when Paul Tudor Jones came out, and that's what got me going on Bitcoin when Paul Tudor Jones came out. And, this is the kind of thing that can build steam when you have legitimate companies, legitimate individuals. I don't think Uncle Warren's going to be adding any Bitcoin to his portfolio anytime soon, but these are the kind of things that can build momentum behind an asset in the short term, that can rile up the sentiment, that can get it going a day and then another day, and then the technicals take over, right? To break out of those consolidation patterns that Bitcoin's been in, it usually takes a catalyst or something, and you get, this euphoria building. Interesting things could happen on that chart. Now, we still have a technical resistance level waiting for a little bit of confirmation to get above that technical resistance. You don't have to wait much, right? I mean, you don't have to wait hardly at all. But that signal could be coming sooner than later in the coming days.
Mhm. And by the way, we're not talking about a lot of the cash that Square has on hand here. Obviously, in a Jack Dorsey CEO, very, very tech driven, very, new age kind of guy. Doesn't surprise me that he's going to add Bitcoin, but I do think market does hit those headlines, right? And it kind of creates that momentum and that anticipation. And people are like, okay, yeah, Bitcoin, even Jack Dorsey's behind Bitcoin to get you excited about it. Obviously, that chart is very, very bullish. Tyler, the Bitcoin thing, I mean, is there a reason why you've never played it? Just prefer to stay in stocks, leave it alone, didn't like the craziness back in the day? Are you open at some point to playing it?
I'm open to it. I tried to set up a Coinbase account back when you guys were yapping about it on the Trading Justice podcast, back when it was under $1,000, but I couldn't get the stupid thing to work. So I'm like, look, I'm in finance and I don't know how to connect this dumb thing to my bank account. Screw it. And then, I went to 20,000 and I'm like, all right, screw you, Bitcoin. So I think, yeah, I'm open to it. Sure. But can we make it where I don't have to jump through hoops to do it? Like, can you just make it an ETF where I can click a button on Ameritrade and buy it? It's probably easier now than it used to be, but.
Hey, listen.
I mean, you have some ability through GBTC, by the way.
Hey, Tyler, you and I need to have a private conversations because we'll have a riot in that discussion.
Yeah.
Okay.
Yeah.
So yeah, I think you introduce it into
Tim
a
caught
liquid
it.
ETF.
Tyler totally missed it.
Mark likes trading Riot, RIOT.
Right. Okay. Well, okay. You give me something that's not a speculative small cap fluff, and I'll be interested. But no, I think that it's just accessibility and understanding that I can see it and feel it. And I'm like an old fogey trying to talk about I'm not trusting stocks. I don't know. But
No, and I think you're right, though, by the way. I think a lot of
I have the same amount of conviction as Square. I will put 1% of my portfolio in Bitcoin. That's how
To match Jack, you'll be like, hey, whatever you do, Jack, I'm in.
Yeah,
Listen,
sure.
but there's nothing wrong with that, and it's one of those things that we try to teach. And anybody that is worth their salt when it comes to teaching and instructing will hammer home portfolio diversification.
Yeah.
So that when something goes wrong, you don't lose any sleep. And we've all seen as coaches an individual who had 60% of their portfolio in something, who had 50% of their portfolio in something. And I'm not against taking a larger than 1% stake, right, in something that have a high conviction in, but on spec assets, make some money, but don't bet the farm. That way, if things go wrong, I mean, you don't lose any sleep. The most important thing you can do as a new trader is to make sure you are an old trader. And usually that involves being very responsible with your portfolio, proper position sizing, things that we teach a lot at Tackle Trading.
Preach, Mark. I love that. And the sleep test is definitely something that young traders need to learn. If you can't sleep because you're worried about your account, then you're over leveraged.
There are a couple nights I haven't been able to sleep, and I took losses the next day because I was thinking too much about the action. My favorite thing in the morning is if I wake up and if I'm down hundreds of dollars or up hundreds of dollars or down $1,000 or up $1,000, whatever it is, if I don't care, because I know this will all work out, because you have faith that you just keep doing what you're doing and it's all going to work out. It's oh my gosh, if this happened and then this happened, I've been irresponsible with my leverage. That's when I'm like, when you lose that sleep, then you need to cut down your position size. You need to cut down your portfolio exposure. And I really do believe that. I think the sleep test is huge.
Yeah, I do as well. Sleep test, but just the general notion of knowing that you have exposure, that you can handle the up and down, that things are going to work themselves out. That took you guys some time and some experience to get to that point. And so when you're talking,
you got to lose money.
You got to go through some drawdowns, right?
You usually have to learn the school of hard knocks.
I love, and it's a graph that I've seen Tyler draw a few different times, where he draws the really volatile account movements and then the one that's very subtle account movements that go up. And he's like, which one would you rather see? Because one's going to have you with heart attacks and the other one's going to have you calm as a clam.
Yeah.
Tyler, you know what I'm talking about?
I do indeed. I do indeed. I thought you didn't pay attention to anything I ever said. So that actually gives me the warm fuzzies.
By the way, question in the chat here, Tyler, that I think is very appropriate for right now. Bring up Apple Computer if you can. This is from J3 Polaris. Coaches, when you shift to companies, would you look at Apple? Wondering about waiting for a trigger on the daily chart versus confirmation already there on the weekly above the high of the low candle. What are your thoughts? Tyler, look at both the daily and the weekly and give me a read on Apple if you can.
Yeah. So if I'm looking at the weekly, obviously when it's strong uptrend gives you a correction when it pulls back, 5, 10, 15%. If it was in an uptrend, if the long-term chart made a new high, it's going to look like a bull retracement, a pullback buying opportunity on the big picture. So if you're the type that's waiting for the opportunity to buy, I think that Apple provided you that. I totally agree. It had a nice bullish reversal candle on the week of September 21st. And when it pivots and starts to turn higher, I have no qualms with buying over the prior bar's high. And so I agree. I think that this did give an upward signal. It did signal that the weekly pullback was ending. I have no problem with somebody having entered bullish trades on Apple off of that. Now, it's unfortunate that while small caps have come roaring back and now the S&P is breaking out, a little unfortunate that some tech stocks at least have just kind of taken a breather. It hasn't done much since it triggered, but it also hasn't done anything wrong. So as far as the weekly pattern goes, as long as it stays above the weekly low 103 or so, that bull retracement pattern is still in play.
It's funny, and this is my take on tech, and I feel I have high conviction on this. If the economy gets better, if things actually go better, you want to have minimal tech exposure compared to other areas. That is the overriding sentiment in Wall Street. Ironically, if things get crappy again, and the worse it is, these big tech companies are treated almost like a treasury, like a
safe haven.
The FANG stocks are the new safe haven. Like it is weird, but it's one of the things in 2020 that has become evident that they are a safe haven in tumultuous times. So, but Wall Street, I have seen just dozens and dozens and dozens of articles. The sentiment is overwhelming that you want to be in cyclicals. You want to be in other places if the economy is getting better. Now we'll see if it's getting better, right? That's not exactly a foregone conclusion, but that desire to shift away from the valuation levels of big tech to other areas of the market in the short term, I think is very, very strong.
Yeah. So just to finish this up though, Tim, so going to the daily then, obviously you're seeing more detail of the same pattern play out. You can see the reversal higher here. And yeah, it's just pausing. It hasn't done anything wrong, but it's kind of lost some momentum. So for a trigger, when I see a stock that's chopping like this, your guess is as good as mine as to when it's going to finally start, rising. But Tim, the challenge with Apple is you have so many potential pivots here. There's not a clear, obvious answer like there is on the S&P 500, where you can draw a line at that 3420 or whatever level it was. That we hit this 25 times. If we break above it, that's a change in character. Apple's so choppy that it's like, well, do you go with this pivot right here? Do you go with this pivot right here? There's not a right answer. If you wait for it to take all of them out, got a lot of confirmation, but the price is a lot higher. So, perhaps in a situation like this, I either find a better pattern, or maybe I just hedge my bet and scale in. Don't live or die by breaking above one of those pivots, but maybe you have a starter position and you only add if it continues to break through the rest.
And that makes a lot of sense to me, obviously. And I think that having a thorough plan on how you're going to add exposure to a company on your watch list is part of the reason why you have a watch list. So if Apple is one of those stocks people track, and everybody seems to track Apple, build a plan like Tyler's been talking about here. Where are you going to add exposure? How would you hold if you're already in it? All that kind of stuff. I like it. By the way, while we're on tech, there was one tech story today that really grabbed my attention. It was IBM. If you can bring up IBM here next. Marky, I don't know if you saw this story, but basically IBM said they're going to spin off, their global technology services division into a separate public company, and its managed infrastructure services unit is going to be a separate company from that. They're doing this to create some kind of hybrid growth strategy. Mark, what's your read on this? The initial reaction on IBM was a big.
Well, Matt
pop
had a
here.
great joke. I wish he's here, but I'm going to give him full credit. He's like, so IBM is basically spinning off IBM, where and if you don't understand, IBM is IT infrastructure, and that's the business they want to spin off. It's a curious move. Now, like on any headline, right? Just go follow Beyond Meat for the last 2 weeks. We now have sausage patties. Beyond Meat goes up like 18% on the headline that they making sausage patties now. So headlines always have a chance to jack up the price, but is it the type of headline that can create real excitement? I mean, obviously from the sell-off, the answer would be not exactly right. IBM's boring as crap, and that doesn't mean it will be always. It's but IBM's IBM, right? IBM's IBM, and it's like, and what did Matt? What was another one of his jokes? It's like if Facebook said we're spinning off Facebook and just going to be Instagram now with ticker symbol FB.
Yeah.
So I mean, IBM's going to be IBM. I would like to dig more into the two components, and after the spinoff, maybe there's something, break down the revenue numbers. But IBM is IBM. It's boring, steady.
Maybe they don't want to be IBM. Maybe they're having their midlife crisis. They're having their midlife crisis. They want to smash the buy button, just like all the 2020 millennials, Mark.
And that very well may be. That very well may be. I mean, some people like stocks like this. I actually do. I used to have IBM on my list of 100, but this news isn't going to get me to put it back on. It would have to take something else. But you also have to keep an open mind, right? Because Microsoft was in a consolidation pattern for about a decade? Boring for about a decade. Great cash flow stock, right? Great cash flow. I mean, IBM, there were classes I would see coaches teach on doing condors and credit spreads on Microsoft during the decade, because it was just so easy to do. So things can change obviously. But I don't know if this is the move that's going to make him change.
Tyler, any interest in this company?
Nah, move along.
Yep, let's do it. Domino's Pizza next, if we can. DPC earnings, it's been one of the better performing companies for the better part of 2 decades, actually now, Mark. Just a huge juggernaut from a long-term trend perspective. Earnings came in at $2.49 a share on the quarter. Not many of the earnings reports this week. We're going to get a lot more as we move through the month of October. Earnings season starting a little bit hotter and heavier, even as soon as next week. Revenue beat forecast, Mark, but the U.S. comparable store sales, they did not come out and just blow the doors off. Market didn't love the reaction. Down 6% here. Tyler, the gap down, this is within the market maker expectations. So it's not like Domino's Pizza's never gapped 6%. This isn't a 26% gap. And it's got a beautiful long-term trend to this thing, and it gapped into the 50-day moving average. How do you read a gap like that? You wrote the newsletter on gapping behavior and whatnot. How do you interpret this on an earnings?
Well, so it's 2 questions. How do you interpret it and how do you trade it? If it's how do you interpret it, it's not bullish. It's down 6.5%, but just because something gaps down doesn't mean it's a good trade. It's a long-term uptrend. Every dip has been buyable for the last eternity. So, am I going to guess this pullback's different? No, I assume this eventually gets bought and eventually goes higher. Domino's is a tough stock to trade. Just when I look at this over the last year, I see a lot of chop. I don't see a lot of clean breakout patterns. I don't see a lot of clean pullback patterns. This wouldn't be one of my favorite stocks to do a trade on. If I had to do something here, I would be hoping that this is a gap that finds support, and then I'd play maybe a gap fill. But when you gap into an area where you have a lot of congestion, it's just messy. And sometimes the best trades are the ones you don't take. Domino's would be a pass for me. If I had to do something, I'd hope that it consolidates and sets up a nice gap fill trade.
No, and this is one of the things about inflation that can rear its ugly head. when you've been trading and analyzing companies for a long time, you see this a lot in consumer goods companies. And one of the reasons Domino's is down today is a higher cost. Right now, people are ordering more pizzas than ever, right? Sales growth is very, very robust. But there's that pesky other side of the equation on cost. And Domino's reported higher costs. That's a nice pullback to the 20 weekly. If you wanted to look at a weekly pullback, if that holds the next couple of weeks and hovers at the 20, that might be a signal there, but that's a couple of weeks away. But it's the higher costs, and higher costs can have a real dowering effect on sentiment. I mean, I've seen like companies like Procter and Gamble, pull up a like 5-year weekly chart. I've seen like during that period, and I look at that period in 2018. I've seen Procter and Gamble like just slide big time over the course, eventually reverses right on this like higher cost sentiment. Now it eventually creates a really great reversal opportunity, but like Procter and Gamble hung out for 5 weeks forming a bottom. So you had plenty of time to see it. So whenever higher cost is the reason for an initial sell-off, I'm really, really careful, because I've seen multi-month short-term downtrends eventually lead to an opportunity. But that cost equation can be very, very dour in Wall Street and in sentiment as they like shift money to other places because they don't want to mess around with it. So I'd be careful on Domino's right now in the short term. Long term, Domino's is a great, great company.
It's been a great company for a very long time, no question about it, obviously. And really, I think it might even be just a better longer term, investment. If you go back on that daily chart, Tyler, there are nice swings in there. There's no question about it. But one of the best things about that chart and about this company has just been the consistency of the long-term performance. So I don't know. I mean, I would be open to somebody saying, hey, listen, I'm looking for a trade here in a couple of weeks after positive development. But I don't think you're going to panic here on Domino's.
And Domino's really should not be on a swing trader stock list. Yeah, you got to know your stock's personality. Does not do well. It's more of a position trade investment, looking at Domino's in a swing trading stock.
Yep. Next one here, Marky, Regeneron, REGN. This company's been in the news quite a bit recently, obviously, and they administered some of their antibody cocktail to the president when he was at Walter Reed Medical Care Center over the weekend as well. Regeneron has asked the FDA for emergency authorization of that Regeneron CoV2 antibody combination because of positive results out of their patients and whatnot. They want to get enough for just these really high risk cases and whatnot, try to push this through. Mark, virus news, progress on virus news. Are you seeing any impact in the market when these headlines hit?
Dude, the market can't focus on more than one thing at a time, man. It's been stimulus the last couple of weeks. You think it can focus on the virus? The market is the worst multitasker in the universe. And you'll see that. Like, it's going to be like, once stimulus becomes out of vogue as far as the headlines that move, it'll move on. Election risk, market up today or down today on whatever. It doesn't have the chance to multitask. Virus is an accepted thing. Therapeutics are accepted things. These companies, though, are very difficult to trade. There's not been a lot of, we've seen this in Moderna, very difficult chase the news type things. If you go to IBB, if you want to look at and trade the space without the individual company risk, going to a trading instrument like IBB, where you have this diverse mix of companies, diversified ETF, if you're interested in trading the space, I would put this on your watch list. Look for patterns there. Had a nice little breakout before the market did 4 days ago, right? Mm-hmm. So that's what I would put on your watch list over an individual company like that.
Yeah, I like that.
I just want to weigh in real quick, guys. I've done my due diligence on the cocktail that they created, and it's actually really simple, and it's shown great results as a therapeutic. Mm-hmm. I agree with Mark's take, and don't do drugs. The only drug companies I trade are Pfizer and J&J, but I do think that their current cocktail they're putting out could actually help. Not necessarily the market, but it could definitely help the situation that we're in. It's a very good therapeutic that helps ramp up the body's response to fight off the virus. So I think it's good news, and I've done my due diligence into the risks and the studies they've done around it, and I hope it becomes widely available.
Listen, all of these smart men and women that are working hard and diligent this year on vaccines and therapeutics, thank you for getting me back to karaoke and us all back to our lives soon. Modern medicine is amazing. Modern science is amazing. These are these are the smartest and brightest people in the world. They're going to come up with cures. It's just how do you make money off it as an investor? Because you don't know the profitability. You don't. I mean, there's so many of them too, right? So
see, I don't think you can try to make money off it, because the other thing they're talking about is trying to make it a government paid for, to where nothing's out of pocket for the person. And when you do that, how does that going to pay the company really? So I don't think you can profit by trading the company based on the cocktail.
They're a for-profit corporation. I'm sure they're going to find a way to make at least some profit. I know they've had reasonable conversations, Cody, even around the vaccine. Even other companies outside of Regeneron, they've been talking about, we're not trying to make a lot of money and all that kind of stuff. I do get that, but I do think they'll find a way to make something out of it on Regeneron. I can't imagine they're going to put all the time into production and not expect some profit from it.
Oh, I agree with that, but I don't think we're going to see a huge pop like you see in some of these penny stock research companies that they put out headlines and they pop 60% or something like that. I don't think we're going to see that on Regeneron. I think we might see a slow burn up, and then after this is all over, we'll see a shift downside.
All right. Next one here, Chevron or Exxon. Actually, give me Exxon here first. It was an interesting note I read today, Mark. I don't know if you know this, but this was the very first day in a century that Exxon was not the biggest oil company in the world. Actually, Chevron beat it here today. They're right neck and neck in terms of the market cap and valuation. Chevron's about 142 billion. Exxon is 141.6 billion. Both of them are up actually today off the bottoms. I know they're very correlated and going to trade together. Exxon's been coming down for quite some time. We analyzed the earnings last quarter. They're going to have earnings later in the month. Chevron has also been coming down here, Tyler, but just slightly more relative strength in terms of just not getting beat up as badly as Exxon did. Mark, is this just is this noteworthy to you? Is this something or nothing that Exxon got dethroned?
Now listen, I will always have a little oil exposure, but it has never been less than I've ever had. I have a naked put on Marathon Petroleum, ticker symbol MPC right now. I've had a rotating naked put there. Their chart is crappy, but it's not as crappy, right? I've been this way for 6 months, right? The refiners over the integrated companies. I've taken a hard stance on that for about six months. But you don't want a whole lot of oil exposure. So I'll continue to have a naked put at lower levels, but until you see a genuine catalyst to spur oil, man, you want to fade any short-term extremes on this. You need to, and from a trading point of view, there's nothing there from a trading point of view, unless you're going bearish. So, yeah, tough space right now.
By the way, also an interesting note, NEE Nextra, who is the world's biggest provider of wind and solar. We talked wind earlier today, or earlier in the week, Cody. They're actually bigger than both. So, I mean, I don't know if that's just, kind of my reading of the tea leaves here over the next couple of decades as a move away from fossil fuels here, Tyler. But it's interesting to me that the wind and solar company is now bigger than Exxon and Chevron by about 4 or 5 billion. Tyler, do you have any long-term interest in Exxon and Chevron?
Yeah. I mean, I traded Exxon earlier in the year when they went into an uptrend with some decent success. But I abandoned it when it took out long-term support. I just think, I mean, here's the thing. If you want to take a high risk, high reward trade, you try to bottom fish these, If this is the bottom and it runs to 70, good. I mean, look, if you buy down here, you deserve the upside because you're buying a piece of junk chart. I think for me, I would rather be forced to buy it higher and wait till it has better technicals. So there's just too much uncertainty. It's just, I think there are easier trades. And so it's like, well, look, when it wants me, it'll tell me. Right now, it doesn't want me in.
Yeah. You do have to like the chart if you are trying to bottom fish, though. And I'm with you, though. I would wait for higher pivot high, higher pivot low, and actual technical confirmation. Mark, you're more of a bottom fisher. Are you willing to sell naked puts down here?
Oh, I do on Marathon. I mean, once
Marathon?
again, I'm not, and it goes back to what we were talking about 30, 40 minutes ago. I'm only going to have so much oil and gas exposure. Like, and so like, yeah, I mean, if I was going to bottom fish, selling a naked put near the March lows, that's not shabby, right? I just would rather do it in refiners or in pipelines than I would the integrated companies or oil producers. That's just my fundamental long-term analysis. It's been the same for 6 months. So I don't want like, oh my gosh, I'm going to do something on BP and Exxon and Marathon and Williams. I'm not going to, I'm going to pick my spots, have a minimal exposure. That way, if it goes wrong, because if it goes wrong, well, it's going to go wrong for all of these guys. Because if it goes wrong, that means oil stays in the 30s for a prolonged period of time, and it's going to be rough on everybody. So I'm going to minimize my overall exposure to the entire industry. I've picked my favorite. I'll mess around with it, and that's what I'll continue to do.
Yeah, I think that's the right approach. All right, let's go on to a couple more here. I've got Costco next, if we can. We talked about the big box retailer just the other day, actually, and just a nice chart developing for that pullback that ended up materializing. Nice little breakout. Now we're pushing into new highs here. The warehouse retailer reported a 15% increase in September comp sales compared to the 9% that they were expecting. Mark, more evidence that Costco's just been doing really good numbers from a revenue and sales perspective. As we've already run all the way up here into resistance, Tyler, I saw the news, I went and looked at the chart. Do you kind of fade this here? It feels like a stretch breakout that I'd rather find something else to trade. How do you read breakouts like this?
Well, Tim, I am wearing a jacket from Costco. My wife got me this for my birthday this week. Nice little Puma.
By the way, happy late birthday, my friend.
Oh, thank you. Thank you. So I feel like I'm the resident expert right now on Costco. So I think it was good you came to me. I don't like this breakout. I think it's extended. I personally don't like extended breakouts. I like Costco a lot. I don't know that I would swing trade it here. Not super
I don't
close
know
to
if
it,
you
but
should. There are very few chances to swing trade Costco. Once again, it's stock personality. I mean, just go look, in 2020. I mean, can I find a situation that was a great, and I can also find probably 2 for every 1 that you find on situations where your swing trade wouldn't have worked out very well.
Yep.
And so, I love Costco from an investing standpoint. I love it. I think it's one of those things. It is a buy at support type company. If there ever was one. I mean, when you see those multi-day support levels, it's knowing your stock's personality. And especially on extended breakouts, I mean, you'd have to go back and look at the chart. Go find me an extended breakout that worked out well for Costco. I mean, you're going to have a hard time finding that. So wonderful company, horrible technical situation right now, even though it is a breakout. It's just got to know you got to know the company. You got to know how it trades. And great company though.
Yeah, I'm with you. By the way, that breakout it did have like 2 weeks ago, though, is kind of feeling a little bit like the market is today, where it was breaking off of the different pattern. Right?
That's an excellent observation.
Yes.
Catch a little breakout. You got to trust it. Yeah, go ahead.
Well, and it goes with Mark's thing too. It was at support, right? It was building a base. And it gave you a clear level to buy above. So, I mean, from a technical perspective, that is about as good a setup as you get in Costco. So,
Yep. Last one, then some charts I want to look at. Roku next, if we can here, had a price target increase. Got a little pop on the news here today. Just been an incredible performer. Needham raised the price target at $255. And like so many of these upgrades recently, Mark, in price, it's like the market wants to go get it the day they put the number out there. Stock's already at $221. Tyler, this is a very, very bullish company. Marky, is Roku on your 100?
Oh, Roku will never not be on my one. Because Roku's Roku. Roku don't care what the market's doing. Roku's going to be Roku. Implied volatility on Roku's off the charts too. So no, Roku.
I want Mark to say Roku 10 times fast.
Roku. I can do it 3. So I mean, this is a fun stock to sell naked puts on. It's a fun stock to position trade. Weekly charts are a lot more constructive than daily charts oftentimes on Roku. Like you look at the breakout that happened in 2019. You look at the breakout that happened in April of this year. You look at the breakout that just happened 3 weeks ago. You know, it filters out a lot of the noise on Roku. Fun stock to trade, valuations off the chart. I always fade the extremes on Roku. As someone who would like to own a little Roku in my long term, I'm going to wait for something else, you know. But
Yeah, you got to
fun
wait for
stock
the
to day trade too. Fun
Oh
stock.
yeah, it's a really good one for that, and it has a lot of volatility. So there's optionable kind of strategies as well. Definitely watch this candidate. I don't think there's anything there today, but just been a juggernaut, no doubt about it. Tyler, the only thing I got left here, my friend, are a couple of charts, and then we'll go to Mark's news items if we missed any. And I want to get your interest here, Tyler. You know, as my technician, you know that's what you focus on the most. I started to do some initial scanning here today. You know, we're towards the end of the week, start getting ready for my Friday weekend kind of updates on the watch list and whatnot. Look at the home builders, look at Lennar, you know, or DHI. They just feel constructive. So the question we're going to go through each one of these, Tyler, interested or not? Home builders.
Yeah. So I think this is actually a good one to bring up in light of our discussion today. So know the personality of your stock. When I look back at these, maybe it's because I haven't traded home builders in a while. I don't know. It looks more of a position trading stock, but even as I say that, I do spot some decent breakouts. This is the type of stock where I would have to do like a poor boys covered call, a diagonal spread, something that's more like a mildly bullish but positive theta, so that if it gets these 3 week spurts where it just kind of chops sideways, I think strategy wise that would interest me more than just buying straight calls or something. But yeah, I mean, I think you could build something on this that looks good.
Okay, good, interesting. Dell Computer, DELL. Interested or not?
Ooh. I mean,
Will you go to a 2 or 3 year weekly? Because I don't actively trade Dell, but it feels like a better weekly.
You're even more interested now.
Yeah, no, I mean.
So yeah, I'd be interested.
Yeah, I think you have to be interested there.
Dude, I mean, the trend is very constructive. That high base on the ascending triangle kind of caught my attention. You know, you're up near a multi-year high. You know, Dell's not that hot name that people think about, but, you know, I was looking through the technicals and the trend. It's been just a juggernaut here recently. So I like it.
I like it just because that weekly chart on that high base is about as pretty as a technical one as you get. And so it's just really, really textbook.
Well, and if the daily bothers you because it is choppy, then ignore it, right? Go to the weekly, trade it off the weekly pattern, size it smaller with a little bit looser stop, and you can play the breakout.
Yeah. Couple more here. Alibaba, Tyler. I know that you like trading emerging markets through the EEM ETF. Baba is one of my ways that I like to get exposure there. Popular company, obviously big Chinese tech firm. Interested or not? I know it's gappy. I know you've got that, 24-hour ADR type of situation that can happen, obviously, as it's traded on multiple exchanges. But I think it's looking constructive. Interested or not, Ty?
I've already got a position on it. And yes, I'm interested. This is another one that it's just very well behaved, right? Very well behaved. I would adopt this. I'd be willing. Some stocks, like I wouldn't adopt you. Wouldn't let you sleep in my house. This one I would. And I think this is a nice little cup and handle, and you're trying to break over 300 today. I don't mind it.
Marky, what about you?
Yeah, it's pretty sharp.
Pretty chart.
Anytime a stock bounces, breaks old resistance, comes down, tests support. It's the principle of understanding support. Like playing support is an art form that not a lot of traders know. I mean, they know how to play breakouts, right? Because it's easier. But like Baba had at least 6 opportunities to break that support level, old resistance, new support. Bears failed. And when that happens, when bears have their chance and they fail, you usually see a skyrocket. That thing is beautifully technically behaved for a Chinese stock over the last few months. So I think you have to trust the breakout.
Broadcom next, AVGO. Kind of a very similar one, but a trickier confirmation point. You just based on that one gap out is going to make it a little bit different, but still kind of clean. And that was on earnings and whatnot. Tyler, interested or not?
Yeah, I had this on my list. Yeah, I like it. I don't honestly, I've never traded Broadcom before. We've had it on our list before. It's one I've never got around to trading, but I don't mind it. I mean, it's got a decent history of rewarding breakout traders the last 6 months. So I wouldn't bet against it.
Marky?
I'm waiting until after the election for semiconductors to do anything. Swing trading, though, you have to give it the green light.
Gotcha. We'll do maybe two more. Waste management, WM. Let's get away from semiconductors. A little different chart, much more conservative company, dividend payer. Got a nice little resistance there, in my opinion. It grabbed my attention, at least for the daily watch list I was building. Start with you, Tyler. Interested?
For stock trade, swing trade, sure.
Mark, is this company you track?
It actually got bumped recently for someone else.
SeaWorld?
No, that was Goldman that got bumped for them.
Yeah.
But I like waste. Listen, waste management has one of those business. And once again, this is outside swing trading analysis, but that's what I do. Waste management just has one of those businesses that, I mean, it's pandemic proof, right? People need their garbage, right? Now, maybe they can't pay their bill, but that's a whole stimulus type thing. It's boring stock, dividend stock, is his own distinct industry, has been a juggernaut in recent years. High premium these days. I don't know. Like, it's one of those buy the dip things that I like better than chasing it up top, but really solid company if you can buy on dips.
Last one, Zillow, Z, if you can. And actually, we'll get to David's as well. David had a request in the chat. Just a nice little flag here, Tyler. Obviously, just more of a worm burner to the upside. It literally has just been creeping up that trend for a very long time. Ty, and by the way, real estate has been hot all year long. Low interest rates. There's been a lot of people buying all that kind of stuff. Interested or not, Ty?
Yeah, I would love this to come down to the 20 MA.
A little deeper.
How can you not like it? The last upswing went from $80 to 110. Like, yes, I like the dip.
Mark, momentum type chart here. Interested or not?
No, I'm not. It's not my cup of tea.
It's not your style. That's okay, though. That's all right. All right, guys. And by the way, I'm doing my scanning today, and I'm just thinking, man, there's so many opportunities out there in the market, bull, bear, neutral, whatever it is you're looking for. So back on the S&P, let's start doing some. Actually, no, I did say I was going to do David's last one. He had a request in the chat. What do you think about VFC? All the MAs have crossed. Let's look at VF Corp. Marky, I'll give this one to you. Moving average type question. When the MAs start crossing up, do you get interested?
I don't use crosses as entry points. I do like upsloping moving averages, especially when I'm doing position trading. Plays a lot bigger role. I like the space. Like, listen, I like this entire, I really do think your bets on the economy, the virus, the pandemic, a return to normalcy, charts like this. And you can find a lot of charts like this, right? Like Budweiser. I mean, this one's a little more advanced along than Bud, but I get it. Just realize that it is not going to be smooth and flowing, much better position trade than it is a swing trade, because this is a high stop you out. If you have tight stops on a swing trade, you are most likely to get stopped out of that. Go look at the chart for the last 6 months for verification of that statement. So realize that this is more of a position trade and more of a looser stop than it is a swing quick momentum trade. So I would not swing trade it. I definitely wouldn't swing trade it with a tight stop. Position trade, this entire general space I'm a fan of.
I'll point out too, you got earnings in a week, so this is a stay away for me until after earnings.
Yeah, I would too.
Earnings. Yeah. Oh, we're get used to that statement coming in the coming weeks.
It's one of the reasons why I would love twice a year earnings. If the market would ever want to make that change, I would support it 1,000%. All right, boys, that's all I've got here today. Mark, any other notes you had you want to make sure we hit?
Let me just go through some of my highlights. Beyond Meat introduces Beyond Breakfast sausage links. Up again on the news, right? I mean, this has been an endless, it's been so orchestrated. Like if I knew Beyond Meat was going to release about 18,000 headlines in the last 3 weeks of different deals and products, it has just been feeding off those headlines. Yet another one today. Citigroup downgraded from neutral to overweight. Citigroup, ticker symbol C there. So basically, JP Morgan saying, hey, as banks, maybe let's do some cash flow, not a lot in the directional front. I think that is really accurate analysis. You got the Roku news. McDonald's U.S. same-store sales up 4.6%. Nice little constructive chart. McDonald's has done very well. Anything with a drive-through. There is some general sentiment here. And there is a nice little maybe breakout forming. Any interest in McDonald's chart?
Position trade, yeah. Tough swing trade for me.
Yeah, I think it's a good potential position trade as well. It's just had a beautiful uptrend for a very long time. It's kind of the way I treat that type of stock, but I'm interested. Yeah, I could see McDonald's. Plus the liquidity behind it. The options are usually pretty good. You could still do something with it. So, yeah.
Last note I had from the news front, Harley Davidson up after Webbush, and there's nothing Webbush has not called a top idea. Webbush is one of my favorite analysts. They just think everything, they just jack stuff up constantly, but they did call Harley Davidson a top idea.
I don't see it. I don't know. I mean,
you're looking at it from technical eyes.
Well, I'm also thinking about it from the perspective that we're talking about a high-end item, and we still got 10% unemployment globally, pretty much, probably a lot higher in participation rate. I see long-term pressure on the stock. I just don't see it myself. I know it's a great American brand. People who love their hogs, you do not want to mess with them. No question about that. So I'm not putting anything against Harley Davidson here, but I just don't personally see it.
What about the technical setup? Because you're going to be clearing I think that's the 50 weekly, right?
Catch a breakout. Yeah, you've got
and a really clear resistance level to boot. So you're starting to clear moving averages. You don't really have anything in the terms of resistance till you get 33. So you got to have maybe 12 or 13% on a conservative target price appreciation. Okay, now it's ran up really strong into this, so that's a no-go. But let's say it takes a week off and high basis here.
Ty?
If it takes a week off in high basis, I don't mind it. I mean, we've had every week we've had one or two of these that have been kind of the recovery, getting ready to break longer term resistance level. Discover Financial was one last week. Mm-hmm. I don't if it bases and gives me a clean breakout, I don't mind it as a trade.
Yeah. It'd be hard to argue with it, Mark, because you do have that clarity in that resistance zone. So there's always that to it. So yeah, a little consolidation, a little breakout. I could see that in a little bit, but you do have the earnings, like we're going to be saying a bunch this month here in a few weeks. So that would always come into play if you're getting too close to that. All right, boys. That's all I got today. Tyler, final thoughts for the team back on the S&P, just, words of wisdom, anything you got there, my friend?
I think we've touched on a lot of good things today. Trading around a core position. Don't try to live and die by one candle. I mean, leave the politics out of it. The chart will tell you what you need to know. And right now the chart's constructive. So regardless of what you think about stimulus, the election, et cetera, it's hard to be bearish right now. It's very hard. In fact, it's impossible. You got to twist yourself in knots to be bearish on this.
Mm-hmm, mm-hmm. Marky, Cash Flow Club tonight. Any final thoughts from you? And then kind of promote that event and also our pro membership if you can.
No, I mean, just listen. I mean, you have to on technical breakouts because I don't trust any of this crap at all from a long-term investing standpoint. I'm going to make that very clear. I trust it from much lower levels because I do think at lower levels, the Fed does more. It would take too long to list off all the things I don't trust about this from an investing point of view. But I just been around long enough to know that when there is a clean technical signal, I shut the investing part of my brain and I'll manage that accordingly. And I'll do a little trading because that makes you money if you do it over and over and over again over time. Not every time. And, and I'm always cautious, right? But technical analysis is amazing. And if you can't learn to trust technical signals, you're gonna have a hard time. Technical analysis is amazing. It will help guide you.
Yeah.
But I still think this is going to be a great cash flow environment. I think it is going to be a far better cash flow environment than it is a directional environment until you get that sentiment shifting boost that's legitimate. Gino tonight, when Tyler's not, Tyler, you've not been available on Thursday nights for several weeks. You need to make yourself available, young man.
I know my kid's been having soccer games.
But the two main cash flow teachers we have are Tyler and Gino, and they walk you through the world of cash flow with a variety of different things. If you go back and look at all the recordings of the Cash Flow Club, if you're a pro member and you want to learn about cash flow, I promise you there is enough material there to become very, very adept in the world of cash flow. Gina will be there again tonight. I really do think this is going to be a really decent cash flow environment. And Gina will be there to illuminate and instruct and share his unique insight on the subject.
I love it. By the way, Tyler, coaching soccer, do the kids got a different coach? Are you the head coach there?
I don't have patience to coach those little rugrats. Nope. I'm just on the sidelines. Leave it to the better dads than me to do it.
Dude, youth soccer, youth sports in general is a lot of fun, no doubt about it. My daughter, she just hurt her wrist the other day. She's in competitive gymnastics and cheerleading.
Mm-hmm.
And, I'm the cheer dad. There's no doubt about it. On the weekends, we do that.
Nice.
That's fun, man. Thursday nights, spending it on a ball field. Nothing wrong with that. Guys, as always, thanks everybody out there. Appreciate you guys in Team Tackle. Give us a thumbs up before you bounce out. If you enjoy our content, subscribe, click the bell, come back and join us. We'll be back tomorrow with Coach Frank, highly anticipated Friday fun day as we always do. We're out for today, guys. We